Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we have a finished triangle in an A, B, C, D, E, and we are now looking for a move to the upside, which is an ending diagonal in a wave of 5. In this scenario, we are then looking for this to be a wave 1 to the upside in a zigzag, a wave A, wave B, and then a wave C, as all of the waves in an ending diagonal have to be 3-wave structures. We are then looking for a retracement in a wave 2, where the 0.382 and the 0.5 are less common targets, and the most common targets for a wave 2 in an ending diagonal are the golden pocket and the 786, with the golden pocket sitting at 36.5k and the 786 at 36.1k. However, this scenario does have some lower probabilities, mainly because of this structure over here. If this is a triangle, then wave E in the triangle, the final wave over here, has a double zigzag WXY, and a double zigzag is very rare in a wave E, which therefore lowers the probabilities of this scenario. If we then look at the bearish scenario here, we are looking for that double zigzag to the downside to be a wave A, looking for a 3-wave structure in a wave B for then an impulse to the downside in a wave C, 1, 2, 3, 4, 5-wave move, where currently from the high that we made over here, which is alleged wave B target, but then in a regular flat, A, B, C, where for a regular flat the target is the 1 to the 105, but for an expanding flat this is your target here, the 1.236 to the 1.38, 38.3k to 38.6k. You want to see an impulse to the downside, and currently if we look at the market structure over here, you can't really see an impulse to the downside. Lots of overlap, lots of corrective structures, which increases the probabilities to go up once more. Now, if we look at the retracement for a potential double zigzag in a wave B, meaning an ABC over here, then we're looking for a 3-wave structure to the downside before continuation to the upside. The 382 is usually a minimum target for a double zigzag. Also, the 0.3 can be used at times. Then you have the 0.5 and the golden pocket, and you don't want price to dip to the 0.7 over here, as that would invalidate a double zigzag scenario where after hitting the 382, the 05 or the golden pocket, you want to see a 3-wave structure ABC to the upside once more, reaching this target area, which is also partly in confluence with the golden target box here, 38.5k to 39k. Now, if you then zoom in to this local structure over here, then we have the bullish and of course a bearish scenario. Starting with the bullish scenario, we're here thinking about a double zigzag to the downside. We have a wave W, wave X, and then a wave Y to the downside, reaching the most common target area for a wave Y over here, taken from the high to the low of W to the high of wave X, which as you can see has been nicely respected with the help of this 3-minute gap. Now, I showed this gap in my previous stream, right, in one of the scenarios, which is this low over here. We have a big candle to the upside, which created an inefficiency, a gap. Then we have the red candle, we have a low over here, and this is the beginning of the 3-minute gap. And as you can see, price respected this gap very nicely. Now, gaps in general are important in trending environments, so make sure you keep an eye on those type of things, those type of gaps over here. Now, what is a bit of an interesting, I suppose, bit of market structure is this move to the downside, because in a double zigzag, you're looking for an ABC, which is then a 535 corrective structure and another 535. But as you can see over here, this looks very 3-wavy, right? So not too convinced yet, right? Definitely want to see a bit more upside in this case. It looks very 3-wavy, another 3-wave, and then this is arguably a 5-wave or 3-wave. But the problem is really that there is a lot of overlap in this whole structure, which of course increases probabilities that anything being formed, even if you go for new lows, is corrective. If you look at the bearish scenario, we are looking at a potential ABC to the downside, but then an ending diagonal in a wave C. Now, immediately want to say an ending diagonal is not common. It is a rare structure, or I should say an expanding ending diagonal is a rare structure and therefore never preferred, right? So this is something we have to keep in mind. Also, Lamone in Discord coming up with this scenario over here, where he also counted a 1, 2, 3, 4 and a wave 5. He saw it a little bit earlier than I, because I was out and about. So once I checked the Discord group, I saw the scenario, which is definitely a valid bearish scenario in a 1, 2, 3, 4, 5, where all the waves in a wave C ending diagonal have to be zigzag structures, and wave 3 has to be longer than wave 1, which is the case. And then after wave 4, you want to see a wave 5 to the downside, which is longer than wave 3. Now, as price is here moving to the upside while recording, I have to move this to the upside as well, which means that this potential wave 5 has to then move to at least a 1-to-1, sitting at 36.6k. But honestly, if we go down that far, why not visit the blue target box over here between 36.3k and 36.5k for some extra support, which is also in confluence with this wave C extended target. Because the most common target for a wave C is also the 1 to the 1.236, which has been respected, right, in the bullish scenario, these fibs over here. But in this case, wave C would be extended to the 1.618 to the 2. And the reason that I show this, because actually it's not a common target, but if we look at this range, it has been very common. This was a 3, right? This wave C was 3 times longer than wave A, right? And it's definitely something that we at least have to keep our eyes on. So that's why I want to show this in this bearish scenario. The invalidation is up here if price pushes to the upside. Common targets for a wave 4 and an expanding diagonal is the 786 golden pocket, currently at the golden pocket here. So yeah, interesting area. Let's keep our eyes open, see what's up. If we look at the range and we zoom out over here, then we have the volume profile and the support resistance areas. And yeah, this range, it just keeps delivering, right? Keeps delivering up, down, up, down, up, down. Nothing really changes. Over here by now we have a triple top, not even a double top anymore. And here at the bottom we have a double bottom. So very clear structure, very clear support and resistance. We have the volume profile over here for good measure as well, right? Value area low, point of control, value area high. And we've just been range bound consistently. Now, depending if price moves to the upside on the reaction over here, potential CVD divergences, we could retest the value area high for a move towards the downside. So keep an eye on some bearish CVD divergences. And if you move to the downside, then guess what? That point of control is just around and about and above, just a little bit above actually, the blue support box over here. So very interesting indeed. Now here's the 3-minute gap again, the daily above as resistance, which is also partly next to the range structure that we have over here. Just wanted to show you, just so you are reminded. And the CVD divergences, well, we had bearish CVD divergences here, which have played out because price moved to the downside. And then on the lower time frames, the moment we made this low on top of the 3-minute gap, I saw this. You don't see this too often, so it's actually nice to show where we made this second green candle. First of all, I think it's important to show that we made a wick over here, moved to the upside, and then moved down. But look at CVD. Candles are red. CVD moving up. People are longing, market longing, but it's absorbed, increasing probabilities to take the low. Low gets taken, and now you see things the other way around. You see a green candle, but CVD moved down, which for me was a sign like, okay, you know, this bounce already starts better. So it has potential. Eventually, over here, we got some more bullish CVD divergences, higher low in price, lower low on the CVD, right? And also here locally, higher low price, lower low on the CVD. So there is some absorption going on of market short positions, which could lead to a bit of a push to the upside. And if we do continue to the upside and take this high, I'm personally looking for the double top at 38k. Now, if you then look at the probabilities of the different scenarios, then over here on the low time frame, probabilities are higher for wave, well, I forgot to change that name, but actually the bearish scenario over here at the moment, where we are then still looking for a bit of a move to the downside after a potential wave B, so a move up and then a move to the downside. But generally in both of the scenarios, that's the important message, you're gonna be looking for the double top to be taken at 38k in the bullish scenario as well as in the bearish scenario. Even if you dip to lower prices and the blue target box, still looking for that double top to be taken. So that is the general conclusion, and then we simply observe the reaction, see what happens. And on the micro, I wrote neutral, but you know, once I go through the video argument, the three-wave structure here, the first move to the downside is an argument for the bearish scenario for a potential ending diagonal. However, an ending diagonal is very, very rare, and that is then also what I wrote as arguments for the more bullish scenario, where we are at support. Keeping an eye on CVD divergences, which appear bullish so far on the lower time frames, and an expanding diagonal, expanding structures in general, are very rare. So it increases probabilities for the bullish scenario, which I suppose instead of neutral, I should have said like bullish based on the conclusion over here, right? But neutral / bullish. I don't want to be too convincing here with like high probabilities for the bull, but as long as we see bullish CVD divergences forming, price moving up, maybe a retracement, more bullish CVD, it of course increases probabilities to the upside. So yeah, at the moment, it's looking good for the bullish side. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.